Hey guys, welcome back. In today's video, we are talking about Adam Aron buying AMC, the squeeze hint, the golden year, and many more in this video. First, we're taking a look at this. AMC CEO Adam Aron makes open market purchase of 250,000 AMC shares at 137 on May 19th, 2026. So a lot of people have been talking about this for a while, where you talk about Adam Aron buying into AMC, and now we are seeing him do so. And this is obviously a very bullish confirmation of what's to come. We've seen how vocal Adam Aron has been about AMC. We know that in the past, because of a requirement, he wasn't able to buy shares of AMC, and now he's finally doing so. And especially with everything that has already been talked about, whether it's with the future projections, whether it's with the current earnings, whether it's with what we're doing, we are all seeing how AMC is shaping up for an extremely good future. And especially going on to Q3, Q4, we're going to be seeing how that growth is going to become a rapid increase as well. And so with all of this, we're finally seeing him buy into AMC shares. A lot of apes are already very happy about this sort of news, and as we should be, because when we are seeing executives buying into their own company, especially Adam Aron, it means that he's very confident for what's to come. It means that he understands the potential there is going forward for AMC. And of course, it brings reassurance for the rest of the community, as I'm sure many people are happy about this particular set of news. And this isn't the only thing, but of course, it is one of the biggest things in terms of buying into AMC. But we've already seen how there have been multiple companies who've bought into AMC. One of the ones we talked about is, of course, Pentwater, and where we talk about how you can see now that we have bankruptcy out of the way, now that AMC is headed for a bright future, we're excited to see what's next. And especially with the kohrs recent squeeze, it might give a hint, a demo of what Pentwater is capable of, where we see Pentwater obviously buying shares, where we see Discovery buying into shares, and all of these are very good things. All of these are what we want to look at. And I think the timing is obviously very good as well, especially as we're seeing more and more institutions buy into AMC, and suddenly we're seeing Adam Aron buy into AMC as well. It really feels like it's shaping up that something is about to happen, that we are looking at some major volatility coming soon and some major movements for AMC. And it would explain for why suddenly we're seeing a massive surge in increase in AMC shares. Remember, when we talk about institutions buying, we're not talking about suddenly we're seeing 20 institutions buying 100 shares of AMC. We're talking about institutions who are willing to be buying millions of AMC share. We've seen UBS recently, we've seen Pentwater, we've seen Discovery. All of these are just showcasing that they are willing to buy a large chunk of AMC because they've realized the potential, they've realized what's going on to next. And if you take a look at this, you can see in the chart that CEO Adam had his golden years at AMC Theaters from 2016 to 2019. He grew AMC into the largest cinema chain in the world. I believe his golden years are back and starting in 2026. And so it kind of goes back to what I was saying earlier with how it feels like people are realizing that this year is going to be a major year. And Adam Aron for sure definitely has a hunch on what's going on within the industry. He knows what he's done in the past. He's seen how well certain strategies can be, how he can bring a company and elevate it to the next level. And so as we see that we are presented with this opportunity again, it feels like Adam Aron is taking this opportunity. And this is what we've said with how the growth we've seen with AMC in the past before, we're going to see it happen again now. And this time it will be bigger, better, and more efficient. And this time it will attract even more investors. And when we talk about a company that is extremely undervalued, that is showing major improvements into fundamentals, and it's still very discounted, but yet it's attracting a lot of investors, it will just show how high AMC will truly go. And that's what we want to see. And kind of going back to what we've said with the Pentwater, where they bought into obviously with 63.6 million, and they're not trying to control the company, they're trying to invest, but it also talks about that potential of the recent kohrs squeeze and what they may want to do with AMC as well. So this is why I've said that there's a lot of big things coming. And in the past, and especially right now, currently, what we are seeing is that AMC post-market is 147. Now, this is obviously off the back of the news of Adam Aron buying. But I want to talk about what we need to look out for as well. Remember, AMC is constantly faced with suppression, with manipulation. And every time there's good news about AMC, they would want AMC to go down because then they can spin a narrative that AMC is a bad company. So at times like this, where we're seeing Adam Aron buy into AMC, we need to understand the context behind it. We know that it's because he's willing to invest into AMC. He understands what's in the future for AMC. So don't be kind of abrupted by the price, because we've seen it in the past before how AMC was going down and tanking when there was no bad news, but because of the constant algorithms parking buy orders and flooding sell orders. And that's what we have to realize. And a big thing about this as well right now, and I think that we are in a very good timing for this, is you can see an example of if all 4.1 million retail investors simultaneously buy 1,000 shares each, the total demand of 4.1 billion shares would drastically exceed AMC's total outstanding shares by over 660%. And talk about how this is a hypothetical example of how we can have a supply shock, a demand shock, and of course forced squeeze. Now, this is very, very hypothetical. For all 4.1 million retail investors to buy 1,000 shares within a same kind of period of time is obviously very difficult. But what we are seeing is how that context still applies. Maybe we won't get a 4.1 billion share buy order, but we're still able to get a large amount of that, especially with what's going on recently. Just like we've said, firstly, we're seeing investors and institutions buying into AMC. Secondly, we're seeing Adam Aron buy into AMC. And now definitely a lot of people are going to be very, very bullish because of this. And so we could be seeing this shock anyway. And that's something that we definitely want to look out for. Now, another big thing of why I think retail is more important that retail is buying as opposed to institutions is because institutions are obviously lending out their shares. Now, we talked about them, Robert Citron, lending out shares for a purpose. It's because on one hand, he's lending out shares so that the shorts are buying these because they need to locate shares. And with the money, they are then buying even more shares, which forces the shorts to create even more synthetics. And this obviously creates a vicious cycle of continuously making money whilst forcing them to create synthetics. And when it becomes too big of a synthetic pile and they don't have the money to locate shares anymore, to borrow shares anymore, to create synthetics anymore, that's when the squeeze will happen. And so it's obviously a good thing in the long run, but in the short run, it's definitely very frustrating to see that they are lending these shares out, which allows the short sellers to have an impact on the price of AMC. And so it obviously would be even better if the retail were to buy it. But as always, none of this financial advice, so do take what I say with a grain of salt, make your own due diligence and research. Now, another big thing is what we're seeing is right now is that AMC it's been 3 days and the short haven't moved on borrow shares just like the 3 days before the rise in 2021. Now, essentially what it's trying to say is the data that we are seeing right now is shaping up to be like what AMC was doing prior to the major movement it had, the mini squeeze that it had. And we are seeing that same thing happening right now. So this kind of adds on to everything that we have been talking about with how and where AMC is going. And this is why I've said that be expecting some major volatility to happen soon. We're seeing a lot of data that's all colliding with one another right now. They're all coming into a kind of one big thing. And so this is something that we should be seeing, or at least trying to look out for. Another big thing you can see from the FTDs as well. We talked about this with how the massive increase in FTDs, as you guys can see here, you can also see from the spikes in the FTDs for AMC going in. And there is no surprise to this because we know that they need to borrow shares. We know that they need to locate shares. We've known how many synthetics they have created. Yesterday, we talked about the amount of float that exists for AMC, and that's the very, very minimum. But it just really talks about where we are at, how much synthetics being created, how desperate the shorts are. And if you want to take an example, we can firstly see this for GameStop, who's in the same situation right now. Firstly, we're seeing Renaissance Technologies buying even more shares of GameStop. Remember, they are a company based on algorithms where they find the most discounted, the stocks with the best return potential, and they buy into those stocks. The fact that they're buying to GME is obviously a very good sign, but it doesn't stop there, because we've seen how Charles Schwab has also increased their stake. We've seen how Goldman Sachs have bought more calls of GME. We've seen XRT, what we are looking at right now, to then see an all-time high short interest of 2012%. So let's quickly rewind all of this and kind of recap why this is important. Firstly, going back to what we talked about, the fact that we're seeing FTD spikes is showing the desperations for shares of AMC, because it shows that there is a lack of shares, but yet they are still needing to locate shares. And so it shows the desperation. It shows the demand for AMC shares. And we know that GME is in the same position. And we can see the demand for GME shares because we're seeing companies like Renaissance buying in, like Charles Schwab, like Goldman Sachs, and what we can also see with the XRT, the ETF used to locate and short GameStop and AMC to go to an all-time high of 2012%. You can see how all of these things are starting to stack up and how they are all correlating with one another. And it's how we can use these data to really understand what's going on, to how to really know how much trouble these short sellers are in and just how much the demand is. And when we know that there's a high demand for AMC shares, for GME shares, in return, we will know that the squeeze price will go into the hundreds of dollars, the thousands of dollars, the tens of thousands of dollars because of the demand for these shares. And another showcase of GME, and we showed this as well, is the fact that we're seeing 4.19 billion synthetic short interest, where we're seeing 1,027% of the flow. So these are all just really what we have been highlighting for a very long time, but now we're seeing it in broad daylight. And it feels like that it's going to be beginning to crumble these short sellers. And it's why we're potentially seeing things like this happening, where SEC prepares to allow blockchain-based tokenized stock trading. So this is definitely a big thing. Now, the reason why I say this is because from everything we just talked about right now, it shows one thing: the demand for shares of AMC and GME. And in a similar timing, they released blockchain-based tokenized stock. Why is this important? It's because firstly, it feels like they're trying to hide naked short selling, because from the data we've just shown, there's clearly a massive amount of synthetic short interest, and yet they're trying to hide it, because what we can see is that these tokenized shares will make it even harder to track synthetic shares. Now, the reason why I say this is because, read this here, the framework, and this is for tokenized shares, would allow third parties to create digital on-chain versions of public stocks such as Apple or Tesla without the consent or involvement of the underlying issuing companies. So this is the crazy part. They're able to create these tokens, these shares of stocks without actually needing the actual company to issue out any shares. Meaning right now, when we see AMC doing these offerings, it's because they are actually offering shares that will then go into the market or go to investors who then may sell and go back into the market. But these are all done under the consent, the supervision of AMC. But now we're seeing how they are able to then create these shares without any reasoning, any involvement from AMC, and they're then able to still create AMC shares. You can already see how this is what we talked about with how they're trying to potentially help out the naked short. And it doesn't stop there, because what we are seeing right now is that the SEC innovation exemption for tokenized stocks does not universally eliminate dividends, but for many third parties such synthetic versions enabled under it, direct dividends are often not provided. So in the past, and the reason why this is important is because we talked about how if AMC were able to issue out a dividend, then the short sellers are in charge of actually paying out dividends. And that's how it normally works. But if they change it and they use these digital tokens of AMC shares, they're very likely to then not be provided or required to issue dividends. And especially at a time where AMC is improving their fundamentals, becoming more profitable, and increasing their revenue, and have a higher possibility of issuing out dividends, they suddenly do this. It feels like everything's linking up, and it just talked about why it's a race between AMC squeezing or they try and find a way to get out of all of this. And you can even see here from as well with the off exchange. And we talked about why this is ridiculous, because firstly, we talked about how dark pool were fine. We talked about how Blue Ocean ATS failed to detect and report suspicious trading activity. The fact that they were unable to spot 270,000 orders. And this is how we know that dark pool is not useful and how the dark pool is used to manipulate. And it really just goes on to kind of validate everything that we have been talking about. And another big thing is the fact that we're suddenly seeing the reverse repo increase. We're seeing it go to 12.9 billion with the counterparties going into 22. Suddenly, as we see AMC seeing more shares being bought, seeing more GME shares being bought, as we suddenly see AMC improving, GME improving fundamentally, all of a sudden, tokenized shares are available. All of a sudden, people suddenly need a big injection of liquidity. What's going on? And we know that that's because we are applying the pressure. And finally, you can see as well for the Japanese yen is also a worrying issue as well. We talked about the Japanese yen carry trade, and it feels like it's about to happen. As always, known as the Financial Advice, and I'll catch you guys next time.